But they go on to say, indeed, we argued in August that the lower interest rates could lead a significant portion of the 7.4 trillion sitting in money market funds to come off the sidelines. That's briefly what we discussed earlier. So we would have to wait for those cuts to come into effect. People would get the email or the notification saying, we've lowered the interest rate that you're now getting to blah, blah, blah. And they'd be going, oh my God, I'm not doing that. That's rubbish. They're then going to pull it out and put it into something. And that will push our bags higher, hopefully. Bitcoin dedicated DATs now hold over 1 million Bitcoin, representing approximately 5% of the token circulating supply. Similarly, the top ETH dedicated DATs collectively own around 4.9 million ETH, 21.3 billion, representing over 4% of the total ETH supply. And you can see a nice little chart here of the companies and their holdings of ETH.
Do you think that's a bad thing for ETH that so many, especially with it being proof of stake, so much of the ETH supply is now being held by DATs?
I think not current levels. I think they're only representing 4%. No, but if that was to get toward double figures, I think there could be that argument for it.
Problem is, it definitely does, because unlike Bitcoin, holding ETH begets you more ETH because of staking. So let's see. That might become an issue.
But then again, I think we will have the natural cleansing at some point where they will just be forced to puke their positions because everyone's jumping on board on it, but we'd have to see. Bitcoin declined against USD in 6 consecutive Septembers between 2017 and 2022, with an average negative return of 3% over the last 10 years. That gives many investors the impression that seasonality heavily influences crypto's performance and that September will be a bad time to hold risk. Yet if you were to trade on this assumption, you would have been wrong in both 2023 and 2024. Indeed, we don't think monthly seasonality is particularly useful for trading signal for Bitcoin across frequency plots, logic odd ratios, out of sample scoring, whatever the hell that is, placebo checks and controls. The message is the same. Month of the year isn't a statistically dependable predictor of whether monthly log returns will be positive or negative for Bitcoin. And they've got this lovely little heat map here where you can see the months that have the most green bars is basically positive, and the ones that have more red bars is negative.